Karel, on January 3rd, 2018, all European financial institutions have to comply with MiFID II. As we very well know, implementation of any policy faces a degree of uncertainty. So what could you say about the most discussed risks?
I think the largest risk is the risk of compliance, of having to comply with a multitude of rules, which are an exponential enlargement of what was already in place in MiFID I. So it's a myriad of rules banks, investment advisors, brokers have to comply with. And the risk of not complying, what is it? And it's extremely difficult to know. If you look back in the phase 2007-2012, when MiFID I had to be implemented, we see that many member states were behind in supervising compliance. Of course, the firms themselves were probably also behind, but that has given many firms, let's say, a period of grace, essentially. What we see now, of course, is probably it's a different environment, because we've got the financial crisis. Regulators may look at it differently, maybe stricter. So they may have to watch much more whether they're compliant with the new rules, yes or no. Of course, apart from that, there may be probably also differences in the way it may affect the different firms. So the way it's seen now is that the compliance risk for larger firms is bigger than for smaller firms. Very targeted asset managers, brokers, which know their clients, which are not kind of transferring income from one unit to another or revenues from one unit to another, may have less problems than large universal banks or large investment banks, which have a multitude of business lines, where the directive formally prohibits, for example, that revenues from selling funds to clients go to finance analysts.
In your opinion, once the new rules are implemented, how would they affect the market?
The impacts on the markets is also, I think, substantial, in the sense that whereas there was price transparency for equity only so far, now there will be price transparency rules also for bonds and for derivatives. Of course, derivatives is a leftover from the financial crisis, which required OTC derivatives also to be, if they are standardizable, to be traded, to be cleared first, and to be traded also on regulated markets. The discussion on fixed income, on bonds, has been on for a long time, was already on before the crisis in 2006, 2007, but is now an obligation from the 1st of January 2018. What will be the impact? Difficult to say. There has been a lot of lobbying going on saying that the same degree of price transparency as, for example, for equity markets would hinder liquidity. The Commission, as a result, has come out with a kind of a staged implementation of the price transparency rules for bonds. Anyhow, let's say the most liquid bonds, which are probably 90% of the volume of the bonds traded, will be affected from 2018 onwards, and will have to be price transparent from that moment onwards. The impact will be that probably to some degree there will be less of lucrative business in bonds trading for banks, and some of that business may have to go on trading platforms rather than being bilaterally traded between banks. The spreads may decline, hence the profits for banks may decline, but it may be an opportunity for markets, organized markets, to set up trading platforms for bonds.
With MiFID II and Brexit uncertainty, is Europe pushing financial markets away from itself to Asia, to Canada, to New York?
I personally don't think so, because first of all, what I read everywhere is like those dealing with MiFID II implementation in Britain as well as in the rest of Europe are going ahead, even in Britain, and it affects the City of London and the UK much more than any other place in the EU. So they're going ahead as normal, and they hope that in the meantime, so in 2 or 3 years, we will have a form of an agreement between the EU and the UK by which, certainly for the wholesale financial markets, things can go on as foreseen in MiFID II. They will say, look, we have the same rules, hence we can continue to have access to your market. Of course, there won't be any cross-border access, or much less cross-border access anymore for British-based institutions, but they will try to circumvent this to having some subsidiary within the EU. So I don't expect too much of an impact on overall the implementation of MiFID and the kind of rules which will be implemented, but of course there will be an impact on the position of UK-based financial institutions, which will have to make sure that they have activities for those who haven't got it in continental Europe as well.
For financial institutions outside of Europe, what should they prepare for after MiFID II is implemented?
Those outside Europe, of course, have to comply with the rules which we have in Europe, and they need to know, let's say, that they are extremely constraining. Take, for example, Japanese banks, American banks, that they will have to fully comply with this. I think, by the way, that many of the American banks have been on the forefront in fighting against the price transparency rules in the bond markets, because the American banks, of course, we know, let's say, they are asset-wise extremely strong, extremely big, certainly the large American banks, very active in the city. For them, let's say, it is a compliance exercise, they are aware of this. It will be even a bit more complex once, as most of the institutions enter the European market through the UK, through London, to continue to have the access to the EU market once the UK leaves. So they will have to set up bases elsewhere. So they will have to have, they will have problems in accessing the EU market, more problems than they had so far. So, of course, the UK has been a very easy way for certainly US banks to enter the EU market. That will become a bit more difficult.
With MiFID II implemented, would you say smaller asset managers will have the advantage over the large companies?
Difficult to say. I think so, yes, but on the other hand you could say that the compliance burden is so that only large firms can cope with this huge compliance burden of MiFID II. On the other hand, small asset managers do not have the problems of, for example, cross-subsidizing different units, which is forbidden now by MiFID II, or for example, clearly disclosing all the different costs related to a trade, just because a small firm is active in much less lines of business than a large organization. So the compliance burden for a large organization will cost-wise be higher. On the other hand, cost-wise they can probably better cope with it because they have more diversified business. But many of the requirements of MiFID II, at first sight, should be a big burden for small firms. On the other hand, many small firms say many of these rules do not affect us.
After MiFID II is implemented, what would be Europe's top competitive advantage in financial markets?
Very difficult question. I think the big advantage should be, if you made that abstraction of Brexit, that we have even more than before very much similar rules all across the EU 28. Of course, that shouldn't be too much of a difference for the 27, with the proviso that, of course, Britain is the by far largest financial center for the EU today. So it should, in theory, certainly for capital markets oriented business, facilitate cross-border activities from one single place. Whether this will be effectively the case will depend on the implementation, but above all on the enforcement by supervisors in the different member states. So once, from the moment they start to interpret the rules differently, there will be a problem for these pan-European businesses to really ensure that they have the same treatment everywhere.
Thank you very much.